Hey guys, in this video I'll be talking about gold and how gold could potentially be one of the best asset class in 2020. First of all, let's take a look at the difference between gold and gold stocks. So basically there are two essential ways of investing in gold. You can either buy the actual gold itself or you can invest in gold mining stocks. The main purpose for buying physical gold is for protecting your wealth and storage of value. It's like an insurance policy that protects you from inflation and economic turmoil and crisis. They don't really give you the high growth return that stocks give you. At the end of the day, gold is money. On the other hand, gold stocks will give you the high returns, but they are more risky because you are buying into the actual companies and companies can go bankrupt. Let's take a look at the 1-year gold chart for 2019. You can see that the beginning of the year, spot gold price was trading around 1280, and by the end of 2019, it was trading above 1500. That's a 18% gain, which is a lot. And if you put your cash in gold, not only it protects you from inflation, but will give you, the 18% return. Now let's take a look at how gold stocks performed in 2019. This chart shows GDX 10 years performance. GDX is an ETF that tracks the major gold miners. As you can see that in 2019 it's up more than 40%. And if we look at some of the individual gold stocks like Kirkland Gold is up more than 60%, Wesdome is up more than 100%, and Equinox is up around 110%. So you can see that gold stocks usually outperform the actual gold itself. So ideally, if you want high growth returns, you will need to invest in gold mining stocks. And if you want more protection and insurance, then you buy the physical gold. Now let's take a look at one of the common arguments for gold. You probably heard this a lot. Gold don't generate interest or income. They are just a rock sitting there. This is a 20-year chart of annualized return of asset class. You can see that gold actually outperformed almost all the asset classes, sitting at number 2 spot with 7.7% return, just behind real estate. So there are some misperception of gold. With current low or negative interest rate environment, gold has become more attractive than ever and could potentially become the top investment vehicle in 2020. What is negative interest rate policy? Here's the definition from Investopedia. A negative interest rate policy is an unconventional monetary policy tool employed by a central bank whereby nominal target interest rates are set with a negative value below the theoretical lower bound of 0%. NRRP is a relatively new development since the 1990s in monetary policy used to mitigate a financial crisis. So basically it means that when you deposit your money in a bank, instead of receiving interest every month, you have to pay the bank for your deposits. And here are some of the countries that have negative interest rate. Most of them are in Europe, along with Japan. In the US, federal fund rate is at 1.75% and Bank of England kept their rate at 0.75. Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, wrote an article about the new paradigm shift. Basically, he explained that every 10 years or so there is a shift to a new paradigm. What he meant by paradigm is which markets and market relationships operate in a certain way, and investors get so adapt to it and it becomes overdone, which leads to a shift into a new paradigm. And in the new paradigm, the market would operate more opposite and similar to the prior paradigm, and that's how the transfer of wealth occurs. He also mentioned that the great financial crisis of 2008 was last major paradigm shift, where the housing bubble popped and government lowered interest rate and it started QE by pumping money into the economy, which created the current 12 years bull market. Ray Dalio also said, identify the paradigm you're in and examine if and how it is unsustainable, and visualize how the paradigm shift will transpire when that which is unsustainable stops. Basically, he's saying that if you can identify the shift early and navigate it properly, you can do well in the market, or at least protect yourself against it. And most importantly, he said that gold should be part of your portfolio. If you guys enjoy this kind of content, please give this video a like. This will help my channel to grow. And don't forget to watch my other videos on mining stocks.